Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. Well, we suppose that the gold market should become the one among most interest markets in the nearest future within the few months. It's just because it always very rapidly and actively reacts on any shifts in a financial system, on different crises, and so on. And currently we see the big shifts in the United States economy, which we discussed in the recent half a year approximately. So as technical and fundamental, we think that gold is turning to the reversal point. And currently we think that reversal might happen even earlier than we suggested. Such banks as the Citigroup, as the UBS suggest that gold market could touch the 16 even, 15 even, 16 even area. But as they suggest, this touch should be very short term. So it will be just some kind of the spike if this term is acceptable for long-term charts such as a monthly chart. And then gold market should turn to the upward direction. In general, we agree. And actually between our target, which at least we see currently technically is around 1680, it's mostly had been touched already. And between the UBS of the 16 even, as you understand, for a long-term period is not really a big difference. So this is first moment. Second moment, the recent pullback that we saw last week, this upward action, is definitely not because of the European Central Bank decision, where mostly suggest that might be reaction on the bad PMI numbers and the recent PMI survey from the Philadelphia Federal Reserve Bank, which is showing the deteriorating conditions in the United States economy. And the pullback actually is the reflection of the investors' reactions. So they start to understand something. In general, well, guys, it is a bit difficult to catch the truth in all these statistics. It's a bit, the crisis is just starting. And statistics shows the mixed numbers. So just put you in place of the common investor. You are calling about the recession, you're calling about the crisis that already has started. You need to buy something safe haven, but not the treasuries. And for just common investor, it's not clear. It's just because it see that the gross domestic product is expected on above the zero on the growth. He sees, for instance, good unemployment numbers, some consumption stands not really bad actually. And he doesn't understand why he should search for something really safe haven, and this should not be the treasuries. Everybody knows that treasuries is the safe haven. Well, but as we are closer, we're diving in the recession, the more evident signs will appear that economy feels problems. So we see already is rising unemployment. And in the nearest few months, we should get high unemployment numbers. We expected negative numbers from the gross domestic product next week. It will be not 4 decimals above the zero. We suggest it will be negative, and the United States economy officially turns to the recession because there will be second negative numbers, quarterly numbers in a row. So that's actually what should happen in the nearest time. And as more evident signs will start to appear, the more investors will start digging this subject and searching for protection, and they will turn back to the gold, especially if they will be able to understand what's going on with the Fed balance, why the bond market currently is toxic and it should not be invested in this market. All this stuff we already have explained you with the details. And we suggest that this reaction mostly on last week is a cumulative effect of accumulation of some concern among the investors. So it's not just some impact, some reaction on the central bank, European Central Bank meeting, rising rate, but investors feels the problem. They see that they should do something, and that is just some kind of the cumulative effect on the appearing PMI numbers. So on the next week, you should be prepared for a bumpy ride, which might be decisive for the gold. We suggest negative earnings report from Microsoft and the Google on the 27th of July. Well, with a high degree of certainty, we suggest a whole % shift from the Fed Reserve. And as I said, we expect negative numbers from the gross domestic product. Later, we also will get retail sales, price consumer expenditures, and so on. So that will be already on Friday. But even these three events is enough to make the big impact on the gold market. So that's why we think that gold market currently is approaching to the reversal point. Seasonally, gold is bearish in the summer, so that's why this reversal might take some long time, maybe within the few months, close to the autumn or something. But in general, the area is close where theoretical gold market starts to reverse up again. So if you're an investor in the gold and you're buying gold for a long term, this is an area already around the 1660, 1680 area where you could think about investing at least at some fraction of your capital in the gold market. So supposedly you suggest to invest some amount of money, so some fraction of 30% maybe of your capital you could think to buy around current levels. So that's what about the fundamental background. The report of this week, guys, I suppose appears to be interesting. We are showing some interesting charts. Also, I think that you get the pleasure to read it. So in the shorter term, we intend to keep going with our trading plan that we discussed last week. So actually we have a great reversal. So we suggest that here we could get as a large bullish reversal pattern, suggesting further upward direction on the gold, which might be back to the 70-90 even, touching of this overbought on the daily chart. And also we will keep an eye on the short-term bearish pattern. This might be, for example, the bread and butter around 1750. So on the 4-hour time frame chart, the trend has turned bullish, and it should remain bullish if even market will show the deep retracement back to the 618 support. This is very important because potentially, since on Friday we haven't got the minor hand and shoulders, so if you remember, we initially thought to get this pattern. So this should be left shoulder, head, and that should be right arm. But with this recent upward performance, we haven't got it, right? So that's why we intend to keep an eye on this larger type of the hand and shoulders. This might be left shoulder, head, right? This might be right shoulder. Maybe it's not very accurate symmetrically, but the idea of the market mechanics is clear. What is really good with this pattern is take a look on the second part of the pattern where the bulls should control it. We see clear signs of that. So you can see really fast acceleration on the slope of the head to the right side. This is good moment. As a potential target of this action, we see the neckline, kind of the natural resistance. Also, it will be the 1618 ultimate extension of the butterfly. You know that ultimate extension of any butterfly, 1618 extension of the whole body, and it stands 1750. And also, what is interesting that both of these levels agrees with the daily 1748 fib level. So as the starting of the pullback to the shoulder, that precisely might be the starting of the bread and butter trade on the daily chart, which precisely suggests, once again, 618 retracement back to the 1705 area. It's harmonically equals to the left arm. So you can see lots of things to do on the next week. So first we are watching for reaching of this area and for some bearish moments around it. If we get it, that will be a chance to make the bread and butter trade with a possible pullback. Once market appears in this area, we could try to deal with this head and shoulders, because at this moment we probably should be somewhere in the middle of the week and in the epicenter of the major fundamental events. It's Fed decision, gross domestic product release, and so on. So that's what we intend to do on the gold market on the next week.